Hi there, traders. This is Brad Gilbert with the weekly kickoff. It's Monday, the 8th of April. All right, now things have settled down after the US non-farm payrolls. I'm surprised actually the dollar didn't keep running a little bit, but you know what? One of our traders, Mo, gave me the heads up there. The Fed has been expecting stronger non-farm or employment numbers, right? So if you consider that, well, then that's what the market was looking for. That's what we got. We got a little bit of a dollar pop up and then straight back down to where it was, right? So the non-farm payrolls, as I mentioned beforehand, was always going to be a short-term trading opportunity. Now what we're looking for this week is the real gravy. And what I'm talking about is the US CPI numbers. I'll just bring across the calendar and then I'll come back to the charts and we'll focus on what's what. There's a bunch of things coming out here, right? You've got the RBNZ interest rate decision. That can be pretty loose, no change expected. So maybe not such a big thing on Wednesday morning. The US inflation numbers are the most important probably thing at the moment, right? We get various things from the Fed, but this is the raw number that tells us exactly, it's sort of like a cross-check of the Fed's plan, right? Are they going to plan? Do we need to cut rates or do we need to hold? That's what we're looking for here. So the only thing I'm sort of looking at is the major numbers here. If I can just clear that screen, the 3.2, they're expecting a little bit more or a little bit higher inflation on year, month on month, slightly weaker, right? Which is a little bit, I don't know if all the respondents are sort of hedging their bets, but we'll have to wait and see how that turns out. Weaker numbers than the consensus. Well, that's going to give us the drive for a weaker dollar because they'll start factoring in earlier rate cuts in the US and stronger numbers than the consensus. You get, dollar strength confirming that they aren't going to be raising or cutting rates in the next couple of months anyway. So that's where we are. This is the major sort of event. And you come back down after that, we've got the Bank of Canada, just over an hour and 15 minutes later, right? That's going to be a lively event, especially straight on the heels of the Fed, right? And then you come into the next day. This is where it gets really good, right? The CPI data itself may not give us too much, but it will tell us exactly what the Fed's doing and what the dollar's doing. From here, this runs perfectly into two major central banks. Okay, we've got the ECB, obviously the Bank of Canada up here, and then the ECB the next day. So the good thing is the market has a day in between the Fed, the US CPI numbers and the ECB. That gives the markets time to move, stabilize, and then this becomes a much sort of easier event to potentially trade, right? So that's one thing that I'll be looking at very closely. And then sort of following on from that, from what we get from the dollar, we do have some good punchy numbers coming out for the rest of the week. We just need to know what the US dollar is doing first. And that's why Wednesday's CPI numbers are important, right? Not necessarily just as a trading event, because it sets the tone for the dollar and that allows us to pick the market off, right? That's what we're sort of looking for. I'll be sort of actually trading live with that. The guys that have got access will be able to take advantage of that. Now, just coming back to what the market is doing right now, right? Start of the week. It's one of those things you need to sort of just have a look, let the market stabilize. Okay. And what I'm talking about is just have a look to see what's going on. Is there any sort of synergy between the equity markets, the currencies, etc.? Like at the moment, US equity futures down. Okay. And US bond prices are down as well, which means the yields are up. Usually that means if the yields are up, equities would rally, but they're not, right? So just be aware of those US equities. The European equities, though, are sort of honking along, as were the Australasian ones there as well. So, you know what, bit of a mixed scenario there. You got Euro and Sterling sort of falling. Then you've got the Aussie Kiwi and a bunch of dollar pairs going up. There's no real synergy at the moment, right? Monday being Mondays, it's a time for where any sort of global news has to be factored into the market. And it's, it's just like, at different times, like normal market conditions back in the day, equity markets did their own thing. The currency markets did their own thing. And the bonds, well, they impacted the currency movements, but they did their own thing as well. these days, these three components, if you're looking for confidence in the market, you want these things lining up, right? Generally speaking, if the yields are going up, equities are down, you got euro, sterling, Aussie, Kiwi down, and the dollar rallying, right? That's what we're looking for normal market conditions at the moment. We don't have it, right? So when you look at the markets, identify that, and then potentially, if you are looking to trade, maybe just scale back your risk a touch, because it means we aren't dealing with ideal market conditions. And then come back to the calendar. Now, there's loads of things here coming out, right, which we know, but try and work in. Just understand that this US number, right, you don't have to necessarily be trading it, but we want to know the outcome of that, because that sets the tone for the US dollar across the board. And that's where we can start to pick things off, right? And that's where your charts come into play, because we can start to look at the charts. And I left on purpose the trend lines. You can see how there's all these false moves last week. Now, what you need to be doing is Monday, instead of sort of trading, come back into your charts and actually start redrawing, refreshing your trend lines to their current, well, the levels that you should be looking at. Okay. So, and you'll find that we've got, we've got some levels to work with here across the board. And it's as simple as that. Once you recalibrate your charts, you'll know the technical levels that we need to be looking at very closely, especially for the US CPI numbers, and then you can piece it all together from there. All right. So get to work, do some technical work, plan your calendar, right? Factor in that US inflation numbers, most important number of the month, and then we can start to pick off the markets. All right, guys, have a good one. All the best. Cheerio.